Good morning, traders and investors around the world. Welcome to this edition of Pre-Market Prep with StockOdds. Short one today. I'll just recap the S&Ps, and we are just cutting through every level possible. We're down 114 handles at 40.16, trying to find a bottom here. Rob, I'm going to go right to Rob here. I'm going to stop the screen share. And Rob, how do you avoid getting caught in swing trades when you have this kind of price action?
Well, no, but that's precisely the point. Is that the problem is, especially when markets have been choppy and back and forth, it takes a little bit to get confirmed that it's going in a particular direction, right? So you need to be sure, especially if you're going to swing trade. And I'm talking about most people swing trade unhedged, right? I recommend swing trading hedged, which then most of the market direction and other things might be irrelevant. But I'm talking about people that are generally not hedged, and they're taking advantage of a groundswell. They're taking advantage of, an attitude, a sentiment, a risk-on environment. And we just had that for 4 days. So the seasonality for September, as we've mentioned, is generally pretty soft for the 3 weeks. Yet we have this 4-day little rally here, right? And I'm not a little rally. I mean, it did pretty well. But September's not over. We're not out of the woods. We've got economic news. So first of all, I've worked with traders for a lot of years, and sometimes traders say, I forgot. I didn't know that stock had earnings. I didn't know that stock had dividend. I didn't know that there was an economic report. I didn't know, or I forgot. That might be you, right? And so going into major economic reports with, even though it's August CPI, it's still considered a leading indicator. And a leading indicator drives the markets. And you don't know what the report's going to be. You can speculate. You can look at all the odds makers and talking heads and get all their opinions and put it all together in a bucket and shake it and take one out. But you don't know. You just don't know. Right? You don't know for sure. So, is this a surprise that inflation is still robust? Is this a surprise that comments are like it's going to take longer to deal with inflation than maybe we would like? None of it's really a surprise. I mean, the market rallied still with the same backdrop that we have had for a while. But it rallied because somehow it got started. And people were like, we're coming out of another pullback. I want to buy. But the very nature of having to confirm a lot of things means that you're probably going to be late, or you're going to say, I'll give it another couple days. I mean, it's only Tuesday today, and we don't have expiration until Friday. So theoretically, we could have rallied back up into here, Joel, right?
Yep.
Now, what did we came like a magnet to the February 24th reversal. That is the most significant, and we've been talking about it since it occurred. That is one of the most significant price points that we have all year. Okay, that reversal day. And it's been repeated in trying to test it, consolidating around it, consolidating again. So it's acting both as resistance and support, consolidating again. We did manage to break above it, and we came right back to it again. Now we shoot down here. We go down to this. We head back to some numbers down in here, and we rally right back up towards it. But we didn't quite get there. And we on some markets we did. On the IWM we did get there. On the Qs we're a bit closer, and SPY a bit behind on that. So we're in the zone. But the thing is, the US dollar, if we take the UUP, I mean, it pulled right back to this consolidation between August 22nd and 31st, right in there. So the dollar pulled right back to that consolidation, and now it's shot up on this CPI. Why did it shoot up? And why is the dollar so important? Because as the dollar gapped down, okay, as the dollar gapped down overnight and pre-market, it spawned stocks and commodities to rally. Look at how silver did. Look at how platinum did. Look at how copper did. It spawned these things to rally. Oil, in fact, too, was okay. Okay, now we have this concern that the feds might have to do a 1%. So the odds just went up on 1% hike instead of 75. That spawned the dollar, and it's impacted the market. So there's this inverse relationship. That's why we keep bringing out our indicators and talking about their relevance. That's why we talk about the importance of hedging. And so swing traders get caught because they have to confirm and they have to stay with what's producing. The problem is, unhedged, you could have a situation like you have today where suddenly, the rug gets pulled out on a economic report, and down we go. Okay. So what does that mean? Well, now it's got to claw its way all the way back up. Tomorrow we have PPI. That's not necessarily going to be, anything miraculous that's going to drive the market all the way back up. So we were almost there, and it was getting to be a risky on the fence point anyway as we approached that. So the right posture for today would be, even ahead of today, I'm concerned about the leading indicator report. I'm concerned that we've had 4 strong days in a row, including gap ups. I'm concerned that, people have forgotten the true condition of the world. When Europe's in a deep freeze this winter, is that going to be a surprise?
No,
I mean,
no.
in a sense, they've been very dependent and moving in a direction of, green technologies and stuff for many more years than even the US. And they're caught because, they just don't have the infrastructure for the fossil fuels from elsewhere other than Russia and stuff. And they're going to get caught. But I don't think when we come into that, it's going to be a surprise. We can look forward and see what the implications are. I have relatives in Germany. They're paying 4 times the electricity bill that they were last year at this time, 4 times, and it's still rising. So it's a very large concern. And we can look down the horizon and we can see, what's potentially coming. So these things shouldn't be surprises. But the other part of it is, if you were complacent to risk as a swing trader going, hey, the market's been rallying, therefore it probably knows that it's going to be okay tomorrow in the news, and I'm just going to stay. I would consider that complacency, because again, you don't know. So if you found the rug pulled out on you today because you carried naked positions overnight and you're down a lot, I don't think it's going to get better today. I don't think we're going to rally all the way back. Hey, there is always a slight chance we could. But, I think that this is a real slap in the face to people that were, buying this rally and still in it. And that's my concern. If you don't learn how to hedge, you're complacent to risk. These are those days where you make a little, lose a lot. Okay.
Yep. Okay. It's sad, but it's the truth. And got to look at the markets. Really, there's temptations to try and pick bottoms on days like this. But if anything, you got to let things shake out and see. And eating losses and moving on is an important thing.
Yeah, just look at the signal to noise ratio here. You know, we're sliding down the lower Bollinger Band. We have very low volatility. We have high, the VIX has risen, but the actual volatility in terms of the market right now is very low, which means that sellers continue to hit the bid and sell any tiny rally. So there's a de-leveraging, de-risking going on. Okay.
Okay. All right.
Remember, in about 45 minutes from now is when, usually by the end of that time period, you get the margin calls if people are stuck or this and that. So there can be a turn between 8:25 and 8:35 if I was looking for a bit of a pop. But other than that, we could still close the day pretty soft. Okay.
Okay. All right. Pre-market prep with Stock Odds signing out. Back with you guys tomorrow.